Hey everyone, in today's video, we're going to dive into the recent report on housing starts for April 2024. So let's get into the numbers and what they mean for buyers, sellers, and the real estate market overall. April housing starts, a mixed bag. According to the U.S. Department of Housing and Urban Development and the U.S. Census Bureau, housing starts in April saw a modest monthly gain of 5.7%, bringing the seasonally adjusted annual rate to 136 million units. This comes after a sharp 17% decline in March. While this uptick is encouraging, it's essential to note that the rate is still insufficient to meet the high demand for housing. Single-family and multifamily starts. Breaking it down, single-family starts dipped slightly by 0.4%, reaching an annual rate of 103 million. However, this is still 17.7% higher than the same period last year, and up 25.7% year-to-date, with 335,600 units started. On the flip side, the multifamily sector, which includes apartments and condos, surged by 30.6% to an annualized rate of 329,000 units. The impact of interest rates and lending conditions. Carl Harris, chairman of the National Association of Home Builders, NAHB, points out that while there was an early expansion in single-family home building due to a lack of existing home inventory, April saw a leveling off. Higher interest rates, tighter lending conditions, and lower builder sentiment have posed significant challenges to new home construction. Harris suggests that lowering interest rates for builder and developer loans could help ramp up home construction in the coming months. Regional insights. Regionally, the data paints a varied picture. Northeast, combined single-family and multifamily starts are down 24.5% year-to-date. Midwest, starts are up 11%. South, a modest increase of 1.8%. West, an 8.4% rise. Permits and completions. Overall, permits in April decreased by 3.0% to an annualized rate of 144 million units. Single-family permits fell by 0.8%, the lowest since August 2023, while multifamily permits dropped by 7.4%. Despite these declines, the rate of multifamily completions remains high, which is expected to help ease rental inflation. Long-term outlook. Lawrence Yun, chief economist for the National Association of Realtors, emphasizes that the current rate of 136 million units per year is insufficient. The nation needs around 1.6 million units annually for several years to balance the housing sector. On a brighter note, home completions are on the rise, with April seeing 162 million units completed, the second highest monthly figure in 15 years. This increase is expected to improve apartment vacancy rates and slow down rent hikes, making home ownership more accessible for many. The supply and demand dilemma. Despite these gains, Yun warns that the housing shortage remains a pressing issue. More efforts are needed to boost supply to prevent home prices from re-accelerating. The laws of supply and demand suggest that without a significant increase in housing supply, prices are likely to stay firm or even rise. Your turn to weigh in. So what do you think about the current state of housing starts and the broader market trends? Are you seeing opportunities in new constructions, or do the challenges of higher interest rates and tight lending conditions give you pause? Don't forget to like and comment. Stay tuned for more real estate tips and updates. H&E team are your forever agents to help you navigate this competitive market and achieve your real estate goals now and in the future. Until next time, happy house hunting.